just at face value, what Hometown Heroes is an allocated amount of funds from the state. In this case, it's $100 million in a form of down payment assistance, but it's not a grant. It's a second loan or lien on your property that is at 0% interest. Okay. So there are no payments, there's no interest occurred, and it's paid back in 3 different scenarios.
What is the lowest credit score that you can actually finance right now?
The whole system is funny to me, right? Because you need credit to build up the credit score, but when you get somebody to check your credit in order to get credit, it hurts your score. The first thing I look at when I'm pre-approving somebody and their credit score is lower than what they anticipated is I look at their revolving debts. And for those of you out there that don't know what revolving debt means, it just means your payment changes because your balance change. The most notable revolving debt is a credit report or credit card.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes to renting versus selling and everything in between. To join the conversation, call in live 888-994-4995. Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today we're going to talk about mortgages, and we have with us today our great mortgage lender, Max Fisch with Nationwide Mortgage. Welcome, Max. This week we had Hometown Heroes open up, which we had last year. This is a great program, and I would love to talk about this program because I think that we need to debunk some myths about this program, because actually yesterday I had an offer come through, and it was actually from one of your guys, and I called up my client to let them know that that this was going to be part of the offer, and they were like, oh, not another one of these government programs, it's going to affect the appraisal. And I said, that's not true. So can we talk a little bit more about how that doesn't affect the appraisal?
I think anytime something like this comes out, I feel like people are just naturally skeptical, right? Because it's, oh, what's the catch? Or what does this entail? Or, you know, X, Y, and Z. So, you know, just at face value, what Hometown Heroes is an allocated amount of funds from the state. In this case, it's $100 million.
That's a lot of money.
It's in a form of down payment assistance, but it's not a grant. Okay, so it's a second loan or lien on your property that is at 0% interest. Okay. So there are no payments, there's no interest occurred, and it's paid back in 3 different scenarios. 1, if they sell. Okay. 2, if they refinance. And the third one is one that I don't think a lot of people know. And that is if they move their homestead from that property to another property, if they were to buy another primary in the future and move their homestead, technically that second loan that Hometown Heroes, that was a part of their Hometown Heroes, could come due. And they could ask for those funds to be paid off. Oh, so if you were to rent it out. Correct. If it is no longer. Yeah, so it's important for people to understand those nuances.
But that wouldn't affect the seller. That's something that just affects the buyer.
Correct. As far as the seller is concerned, if somebody puts in a conventional offer and they're using Hometown Heroes, it's just the same as a normal conventional loan would be. Same underwriting, same appraisal process, those types of things. Same thing with FHA. So it's not adding an additional layer of vetting, other than the fact that for Hometown Heroes, you have to work with a lender that understands the ins and outs of it and what the qualifications are, so that when you are using this program, you can feel confident that, hey, this lender understands the ins and outs, they understand the nuances, and this buyer is approved to purchase the home. Okay. So if your job situation changes, it might not make sense to utilize, if you know your job situation might change, to utilize that program then? I think this goes with any loan, right? If you know that your job situation is changing, it's best to consult with the mortgage professional that you're going through to get pre-approved and to get qualified for a mortgage. But as far as Hometown Heroes is concerned, as long as the job that you are switching to and that is being used to qualify is based in Florida, you should be fine.
Okay.
Either way. So that should, that definitely needs to be one of the first questions that a mortgage professional asks a client, is if they are employed by a Florida-based company.
Okay. So the biggest question everybody's been asking, though, is what are rates today?
Yeah. So as far as normal rates are concerned with conventional, let's just say average credit, you're in the upper sixes, roughly. Average, you could be for a conventional loan anywhere in the upper sixes to mid sevens, depending on credit.
Okay.
For FHA, you're in the lower sixes to high sixes, depending on credit.
Okay.
Okay. But the interest rate question is always it's always so open-ended, because there's so many things that play into interest rate. What is the loan program? What's the credit score? What's the down payment? There's just a lot of variety there.
Okay. What about, like, we've talked about the I always get this wrong, the DSCR.
Yeah.
Yeah. What is that looking at interest rate wise right now, which is a great investment program?
Yeah. So, I mean, if somebody puts the minimum down, which is 20%, and they have a good credit score, let's say, I mean, they're probably in the mid sevens.
That's not bad.
No, it's not bad for a no income verification investment program.
Interesting. Okay.
Yeah.
I thought it'd be like 9.
No, I mean, again, it's one of those things where it could be, depending on, if credit is on the lower end of the spectrum of allowable credit, which would be anywhere from 600 to, 800 plus.
Okay.
If it's on the lower end, then you're probably creeping closer to 9%. If you're on the upper end, then you'll have a 7 in front of your interest rate.
What is the lowest credit score that you can actually finance right now?
So the typical answer is 580.
Okay.
Now, there are ways that, especially for FHA loans, that if credit score is below 580, that we can do what's called a manual underwrite. Typically, that requires a higher down payment. So typically with FHA loans, it's 3.5%.
Okay.
For these types of loans, if your score is below 580, it would require 10% minimum.
Okay.
And then it's just a game of sort of common sense, right, with the credit report. Not every 550 credit is the same. Somebody might have 550 credit because they've been late on things in the past 6 months consistently. Some people might have 550 credit because of something that happened 2 years ago.
So if it's like late in the last 12 months, then that's an issue.
That's a problem. Correct.
But if it's like a medical payment that was from 2 years ago, that's not typically an issue.
Yeah, there's something that we can do
so
about that.
So that's called a letter of explanation?
It would require a few different things, right? It would require letters of explanation over certain things. Hey, why did this happen? It would require more in-depth review of, hey, we want to look at the last few months of bank statements to make sure there's been no overdrafts in their account and things like that. More common sense underwriting rather than black and white, here are the guidelines type of underwriting. So I'll give you an example between manual and non-manual underwriting, right?
Okay.
We got a credit report the other day that on the credit report, it showed that a timeshare had been late a bunch of times in the past 12 months.
Okay.
Okay. Now, the way the credit report servicers and bureaus look at this is they look at timeshares almost as mortgages. They reflect as mortgages on credit reports.
Okay.
But they're not technically mortgages, right? Timeshares are technically installment loans.
Like a maintenance payment.
Like a maintenance payment. So when you run it through an automated system, right? The term DEU floats around out there. That's an automated system that you're running a credit report and a application through.
Okay.
There's no way for that system to read that as a non-mortgage. It's going to read whatever's on the credit report.
Okay.
So it's flagging it and it's saying this person's not approved because they've had mortgage lates in the past 12 months, even though they weren't mortgage lates.
Okay.
So what we were able to do is we were able to do what's the manual underwrite, saying, okay, forget the automated underwriting system. Let's look at this manually. We know that this isn't a mortgage.
Okay.
This is an installment debt, sort of like you said, maintenance payment or like a car loan or those types of things. And so they were able to look at that and say, okay, well, we can still make this loan work, manually speaking,
Okay.
because it's not a mortgage late in the past 12 months. even though that's what it's showing on the credit report.
But it's still late.
It's still late, but banks look at mortgage lates different than they look at lates on a credit card or a car payment.
But it's still late.
Sure. But again, there's guidelines specifically for mortgage late payments versus late payments on other things.
Okay.
Right? Because they're taking out a mortgage loan, so of course they're going to care more if you have a history of not making your mortgage on time.
To me, it's like if you're late, you're late.
I know. I mean,
if you have a history of just being late in general, paying stuff late, to me, you're late. You're late.
Yeah. I mean, that is a common sense way of looking at it.
Right.
But unfortunately, well, I wouldn't say unfortunately, but in conventional and FHA guidelines, there's literally a specific guideline for late payments for mortgage.
Okay.
And if you have more than a few late payments in the past 12 months for FHA and one payment typically for conventional, it's not going to work.
And how long do you have to wait until you're good to go again?
You'd have to wait until you're outside of that 12-month period.
Wow.
Yeah.
That's
the tough part with the guidelines.
So if you're like a husband and wife and one person doesn't have it, then you would have to remove the other person.
Yeah, from the application. Because the way they look at it is, why should we give you a new mortgage loan? This is like me talking as if I'm the bank, right?
Right.
Why should we give you a new mortgage loan if in the past 12 months you haven't even been able to make your mortgage payments on time? It's sort of that way of thinking.
Now, what if it was something like your payment was being made, but somehow maybe your payment got increased, and it's something that, like, let's say you weren't making the full payment because you didn't know, maybe there was an escrow change.
Yeah. Unfortunately, you can dispute it with the mortgage company. Say, hey, this is what happened, and maybe they can remove it. But if it's showing on your credit report,
right?
I had a client, actually a good friend of mine, recently who they switched bank accounts, and they took all the money from a bank account, closed it, put it in a new bank account, and for 1 month forgot to change auto pay to their new bank account, and it marked them late. Because
and you couldn't get the bank to just remove that?
They wouldn't do it. They didn't look at that
even
as a
though
reason.
the bank, because sometimes if you call the bank and you say to them, right, and you say, hey, like, you see, like, I've never been late before.
Yeah.
This is what happened. You see that I've changed my account number. Like,
yeah. I mean, they can do it out of the kindness of their own heart, but if they're having a bad day and you ask them, they'll be like, no, you were late.
Sometimes hang up and call back and talk to somebody else.
It's possible. Yeah. So
right.
that's the intricacies of the mortgage business.
Yeah. All right, well, we're going to go to commercial break, and when we come back, we're going to talk a little bit more about the mortgage and see what else we can find out from Max, because he's got all the ins and outs. So stay tuned. We'll check out our sponsors, and we'll be right back. Stay tuned.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at thelauracell.com. And now back to the show.
Welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. So we're here today with Max Fisch, and we're talking about mortgages, and now let's talk about credit. What do we do to keep our credit tip-top so that we can get that mortgage? Most people don't know what to do in order to keep their credit in tip-top shape. One of the things that I did with my daughter was to make sure that she got her credit at a score that was amazing so that she could buy her home. And by doing that, I had her as a signer on my card. And that brought her credit score from basically nothing to a 775. So welcome back, Max. So most people don't realize that you don't want to, let's just take an example. You have a $1,000 credit line. You don't want to make your credit line go from $1,000 to $1,000. So if you have a $1,000 credit line, you want to try to keep it at maybe like 300.
Yeah.
Once you go to like 750, you might as well take your credit score and say, put it in the dumps.
Yeah.
And if you want to go to 1,000, then you better call them and ask them to bring up your limit to 2,000.
Yeah, so credit's weird, right? Because in order to get a higher credit score, you have to have a history of paying off a lot of debt, right? Yeah. And so it's not always, when we're talking about credit score, there are nuances and intricacies to what makes up a credit score. I actually had a credit expert one time tell me that there was like 253 variables that make up a credit score.
It's crazy.
It's something crazy like that. But some of the main ones, and I don't claim to be a credit expert, right? But some of the main ones that you're referring to are obviously what's called utilization rate. Mm-hmm. So some people say, I only have $800 in credit debt. Why is my credit score low?
Because you used all 800.
Well, maybe because it's an $800 limit. So what that's telling the credit bureaus is that you're maxing out what you're allowed to spend. And so that's not good for credit. So really the rule of thumb is, and to make it easier, right, 30% of what the maximum limit is ideal, but 50% is where there is a big drop off. Once you go over 50%, you'll start to see a lot of dings on your credit report. So the first thing I look at when I'm pre-approving somebody and their credit score is lower than what they anticipated is I look at their revolving debts. And for those of you out there that don't know what revolving debt means, it just means your payment changes because your balance change. The most notable revolving debt is a credit report or credit card. Mm-hmm. And so what you do is you want to make sure that before you apply for any loan, instead of paying maybe one card off and having high utilization on others, take funds and make sure that utilization on all of those cards is below 50%.
Correct.
And that will, give it a couple weeks, and that will drastically affect credit score. It's just one of the many tips.
Yeah. So I know that the other day she had called me and said, "Hey, did you forget to pay your credit card?" And I was like, "No." "Why?" She's like, "My credit score dropped." And I was like, "No, not me." It was funny though, when she had no credit, when she wanted to go buy a car, they said to her, "Oh, she's C-class." And then once she got her credit score to a 775, she became A-class.
Oh, cool.
And then the other thing was, what was it? So that was like she went from C-class to A-class, and that was just within 2 months. So it's always helpful that if you know somebody that can let you be part of their credit, that's helpful.
Well, it's helpful not only to show that you have more of a spending capacity, right? Because that looks good to the credit bureaus, but it's also helpful because of the credit history. Mm-hmm. So that's another variable in credit score, right? There's, it's borderline impossible, let's just say, for a 20-year-old to have an 800 credit score. There's just not enough history,
right?
Unless their parents put them on a card,
when they were 8
years and years ago, which some people, do stuff like that, but if they opened up their own credit when they became an adult, let's say 18 years old, it's almost impossible to have an 800 credit score when you're that young.
Yeah.
Because in order to have a high credit score, you need to have a long period of time and a long history of paying things on time.
Right.
So it's adding an authorized user is a really cool way, because then, just like you did for her, it shows, okay, Now she's on a card that's been in existence for a long time.
Yeah, when I bought a bed and wanted that 0% interest, my credit score dropped 75 points. I flipped out. I was like, what the?
Yeah.
Because obviously I was utilizing the entire credit card.
Yeah.
And I was like, you just don't realize that even someone like me that of course, that, now that I've paid off like more than 50% of it now, it's like the credit score jumps back up, and of course Credit Karma tells me, oh, you're doing something right.
Yeah.
But but the more debt that you have, which I do, I have a lot of debt because I own rentals, and it makes it a little harder. But that stuff, because she's only on the one credit card, doesn't really affect her.
No.
It's just that credit card, which.
Yeah, but I mean, the credit score, the whole system is funny to me, right? Because you need credit to build up the credit score, but when you get somebody to check your credit in order to get credit, it hurts your score.
Right.
Right? When people are pulling your credit and you get more inquiries.
What's your recommendation on that to people?
Well, my recommendation is if you're shopping for something, let's say it's a car, let's say it's a home, try to get all of your credit pulls within the same 30-day period.
Okay.
Because typically the credit bureaus give you a little bit of grace if you're shopping for a specific thing. So they're not going to count it as multiple different inquiries. So if you're shopping for a home loan, for example, and you pull your credit with Chase Bank, right? And you pull your credit with Bank of America 7 days later, that's going to count as one inquiry.
Okay.
Rather than two inquiries, just because they want to encourage people to shop. They don't want it dinging your credit to be a reason why people don't shop around for the best deal. So my suggestion would be to consolidate that within a 30-day period, but don't go outside of that, right? Like if you start shopping, you get it pulled once a month at different places, now you're getting a bunch of different inquiries, and it can impact your credit score. Or find a lender like ourselves that do a soft pull. And what a soft pull is it allows us as lenders to see your credit scores, to see your full report, but it's not officially pulling and adding an inquiry to their credit report.
Okay. And that would be lenders, but when you're talking about buying a car, which is something totally different, and that will affect if they're trying to, what's your biggest recommendation is if you're going to buy a car, do it after you get a house, because buying a car isn't affected, like you can go buy any car you want, you can buy a Ferrari after you get the house, but you can't get the house if you bought the Ferrari. So it's like anybody will give you anything for a car. Like they don't care if your debt is like out the roof. It's like it's just, they'll give you anything. It doesn't matter what your debt to income ratio is when you're buying a car.
And so and as a part of the lending process, the bank is going to see on your credit report the different inquiries you've had in the past 120 days. And they're going to ask about them. Hey, why 3 months ago or 2 months ago did you have an inquiry for Honda? Right? And because they want to know, hey, did you open up any new car debt that's not showing on this credit report? Right? So they're going to be able to see those inquiries. So my suggestion would be, if you know you're in the market to purchase a home, wait to do all of those things. Wait to get your credit pulled at these places until after.
Okay. So what would be I guess the question is right now, with rates being where they're at, what would be any kind of specials or any kind of recommendations that you're offering out to our audience right now?
As far as rates are concerned, obviously, we pride ourselves in being very competitive, from the jump. We always try to put our best foot forward and help, make home buying affordable. But right now, what we're doing a lot of and what we're seeing is working for a lot of people are the temporary rate buy downs that we've talked about in previous weeks. Because at the end of the day, what's the pain point right now? The pain point is high interest rates, high payment. When do people think that's going to change? 1 to 2 years from now is the general consensus, right? When you ask individuals. So if we can bridge the gap between now and 1 to 2 years and give a lower than market interest rate, that's marketable to a lot of people, and it can help.
Can you combine that with Hometown Heroes?
The buy down program? Unfortunately not, because Hometown Heroes has their set rate and it's their set rate for everybody.
Okay. And what's a good way for people to reach out to you if they're thinking about buying or refinancing?
Always by personal cell phone. It's 954-729-6933. That's 954-729-6933.
Okay. And if you're looking for a top realtor, you can give me a call at 954-650-0827. My name's Laura Sanders with Remax Direct, and my website is lauracell.com. Couldn't afford the S, so just lauracell.com. Thanks for joining us, and until next week, we look forward to you listening to us again. Thanks.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.